I thought I knew something. I definitely thought I knew something. I didn't know anything. Like, I just thought I was clear of the concept, and I really wasn't.
There's one thing every trader, even seasoned traders, have in common. They all make mistakes, but that's a good thing. This week, Dr. Jim and I hear from expert traders about the biggest mistakes they've made when they first started out, and we discuss how beginners can avoid some of these pitfalls.
It's the idea that out-of-the-money options, which trade for very little money, will have these huge payoffs. So you buy an out-of-the-money call, you pay $25. It has a theoretical, unlimited potential profit. So people buy them thinking that. And what ends up happening is that they don't pay off, and you just die a death of 1,000 cuts.
I thought what Josh said was there's so much wisdom in what he said, where he was talking about out-of-the-money options. He was talking about buying out-of-the-money options. He was talking about kind of the allure and the attractiveness of these huge payoffs. And the reality is sometimes they will hit because that's the way that it works. But most of the time, man, it is going to be just this slow uphill battle where the option price is just gradually going down and working against you as you're waiting for that big payoff. And it's a really, really difficult game to be successful at.
My first experience trading was really on the trading floor. I mean, I started at the Chicago Stock Exchange. The biggest mistake is probably not jumping in and having confidence in myself at the very beginning. I started off trading equities, but didn't even get involved in options. Didn't even know how to use options until I started, much later. So wish I would have started that quite a bit earlier.
What Dr. Data said about just not really trusting himself and being confident in what he's doing, I think resonates with me the most.
I agree. I think Dr. Data's points were really interesting, and I think that that's something that every new trader can absolutely relate to what Dr. Data had to say there.
I think two things. One is definitely trade too big. And the second one is kind of linked to the first one. I was overconfident about the directional assumption that I had. So either bullish or bearish, I trade too big because I'm really confident.
I thought what Kai said about, being overconfident in your directional assumptions specifically. I mean, Dr. Data talked about overconfidence in general, which I thought was great. But Kai actually, he kind of honed in on being overconfident in your directional assumption. That is so true. And every single trader has gone through that. They have felt that. They know what he's talking about. If they ever tell you that they can't relate to what Kai is saying, they're absolutely lying to you. It's a bull-faced lie. We've all been overconfident in our directional assumptions, and it can get you into some sticky spots.
And I think by sizing correctly helps you build the confidence to be confident in yourself, because you're not going to put yourself in a situation you're going to regret. We weren't in the videos, Dr. Jim, but now we kind of got to go over ourselves, and I'll let you kind of go first. What's something that you wish you would have known first getting in, or some of your biggest mistakes first starting out, or what you would tell somebody first getting in?
If I can trace back all the big mistakes I've made in my trading career, and there have been some big ones, they can all be related to one common denominator: trading too big. That really is it. And so if you think about that and you think about why that might be the case, there's all these emotional elements, talking about hope and fear and greed and overconfidence. It's all a big mixture of all those things. And so, trading too large is absolutely the one thing that I really, wish I would have been a bit more aware of in the beginning. And even like midway through my career, like even up to like last week, like I really feel like, getting that size under check or in check is the most important thing.
No matter how experienced you are, how long you've been in the game, you still make the same mistakes, except you tend to make them a little less often as you go on. Does that resonate with you, or what do you think about that?
I think that's a really good piece of analysis. One thing we have to remember is we're all human. We're all human. We have emotions. Like, there's always going to be some subjectivity involved. But as you improve and as your skill set increases, you can minimize those mistakes. You can recognize those mistakes. Because in the beginning, you're doing things and you're slinging them around. You don't even know you're making mistakes.
You don't even know what's coming.
You don't know what's coming. You don't really know what you're doing. You don't really know what too big is. And so that's always going to be like a trial and error type of thing. You're never going to get to a state of just flawless trading where you never make a mistake. But if you can recognize them more quickly, if you can course correct more quickly, and you can kind of control the magnitude of the mistakes, I think those are all really big wins.
When you put on a trade, a lot of the times, when it's defined risk, you know exactly what you're risking. When it's undefined risk, you have an idea of what you might risk. And I would say to not really lie to yourself on what you're comfortable with losing. And whatever you put on, make sure you're comfortable with losing that exact amount before you enter the trade, and not lie to yourself. And I think one way you can tell if you're lying to yourself is your behavior after the fact. Is that loss making me try to overtrade? Is it making me oversize into the next trade so I can make that money back? So I think it's just kind of thinking ahead and looking out for your future self, and just not lying to yourself about what you're comfortable with, because green is nice, but red will definitely make you be a little honest with yourself. So
No, there's a lot of wisdom in what you just said. I mean, when you put on a defined risk trade, you need to be comfortable with the position sizing. You need to be comfortable with accepting the fact that this may go to max loss. And if you trade long enough, I mean, you're going to have plenty of trades that go to max loss. That's not an uncommon occurrence. I mean, the probabilities that we're oftentimes trading are like 60-40, 65-35. So we're not talking about, no, it's a numbers game, and we're not talking about like slam dunks all the time. We're talking about just, just slight, probabilistic advantages. So you need to be okay with the max loss if it gets to that point.
if you want to learn a bit more about how to get past the options learning curve, Jim and the Tasty Live team actually just finished working on our complete guide to options trading. Everything you need to know to get started in one simple video, so click here to check it out.